Episode 37 of the Kansas City Commercial Real Estate Market Poll, sponsored by Midwest Commercial Real Estate Advisors. That's us. That's me. That's our firm. We are here today on a beautiful Wednesday afternoon, and we've got an awesome guest, an awesome show that I'm super stoked. It's something that everybody, does talk to me quite a bit about, especially in the real estate industry. Do you find the deal first or do you find the money first? And we've got an expert today on all things capital raising, and we'll get to Justin here in just a second. So hang tight, Justin. I'm excited to dive in with you today. But welcome back if you're coming back to the show. A couple things on housekeeping. We are live here on LinkedIn and on YouTube. So if you do have a question for Justin or myself, make sure to drop it down. Marissa is already saying this sounds like an awesome lineup. Thank you, Marissa, for being here. We appreciate it. My team is managing that. So if I miss a comment or a question, somebody will send me a message and I will get it. So thanks for being here. Really appreciate it. Hopefully we're catching people on your lunch hour. A little bit about Midwest Commercial Real Estate Advisors. Here's our team. We're a full service brokerage company specializing in a lot of land and pre-construction development work, specifically in the flex industrial space. And that would be something that I say that not many different brokerages have expertise in. So we are working on around 400,000 square feet for clients and have our own project under the works. But here's some of the folks on the team. You got Nick Morales, Nathan Roberts, Chad Kagi, Micah Mitch, and Derek. Everything from land and retail and office buildings all the way to healthcare. And if you're even looking to sell your healthcare business, either Chad or Derek can help you guys because they sell the businesses and the real estate. So do reach out to us on that front. We're super excited about just kind of the positioning of us in the marketplace, where we've been, how far we've come, and retransitioning from exchange commercial real estate. Mitch Case is the newest addition to our team, absolutely crushing it, sitting in the office right behind me here every single day. If this is your first time showing up to the show, I set out to try to be kind of a go-to source for, real-time data-driven insights in commercial real estate. And I quickly found out, Justin and all the listeners, that people didn't really want to just listen to me talk. And so we started having awesome guests on like yourself. And those episodes have done remarkably well. But what I'll tell you is what's cool is now that we have some viewers, right? This goes out to, I think, 35,000 people on LinkedIn. Each show is right after it's done, gets, about 5 to 7 hours of watch time, which I think is pretty cool. People have been showing up and engaging with us and our guests, which I think is fun. I'm not sure that many other people have that type of platform that you can do that. But every time we have a new project, we're able to come on and actually talk about the deal, right? And I think that's, where this industry is going. I've long said that commercial real estate and just sales in general, we've kind of gone from information asymmetry. And this is something I want to get your opinion on, Justin, but information asymmetry, before internet, maybe, I remember some commercial real estate brokers, some of my mentors and investors saying, man, we had to drive around, get the information and take physical books to people, right? People, we just don't realize how good we have it to be able to pull up an app on the phone on Land Vision or Landglide and see, who the contact information is and then try to make something happen, or stream a video out to 35,000 people, right? It's just, anyways. But I think that my point being is that, for what we are doing today, it's really important to know that we've gone from information asymmetry to information parity, right? Where there's, everybody has the same access to the information, to where I think we're sort of at, which is this information overload standpoint, and then guides like Justin and hopefully myself advising real estate developers, owners, and investors. It's like, man, can you help me work through the noise and actually be a guide for me through all of this? So very excited about that today as well. Our guest, Justin Freistadt. Did I say it right?
I think so. I'm still trying to figure it out, brother. But yeah, I think it's Justin Freistadt from what my grandparents tell me.
All right, Freistadt. Man, that's awesome. That's something that somebody is always going to remember. Well, we have something in common. First 3 letters of our last name are the same. So there you go. managing partner of Pitch Equity Fund and a capital advisor for Safe Space Global. Justin began his career building Heartland Foods, scaling that company to 87 million in revenue. That's pretty exciting. One of my recent guests, Pascal Wagner, was a part of bringing some businesses and selling to some private equity companies as well. So very, very interesting. But now you raise capital, you're managing investor relations, overseeing a diverse portfolio spanning multifamily, single-family real estate, as well as early and late-stage private equity investments, man. So thank you for being here, Justin. We appreciate your time today. And yeah, I mean, I'm very excited to ask you. I've got so many questions to ask you, but first question is going to be, man, how are you today?
I'm wonderful. It's great to be chatting with Kansas City.
Absolutely.
It's a very interesting time for us. I mean, at Safe Space Global, I know this is about real estate, but we just landed a contract with your transit authority, KCATA.
There we go.
We're going to be putting our AI into all of the buses to help keep people safe in public transit here.
Well, public transit is something that everybody wants to talk about the good things about Kansas City. That is one we need to really revamp just in general. So that's awesome. That's really cool. So will you be making a trip to Kansas City then?
I may. I mean, I know we have some of the team out there getting ready for installations. And I also got my dog from Kansas City because, in my opinion, the best breeders for Akitas, they're called Royal Akitas. They're out of Chillicothe near you. So, yeah.
Okay. Yeah, very cool, man. That's awesome. Yeah. You never know what's going to happen out of Kansas City, man, especially the small towns around here. I grew up in Jefferson City, about 2.5 hours east, which is the capital of Missouri. So, and there's a lot of interesting businesses in and around there. I just found out that, if you want a raven, and specialty birds, yeah, there's the top breeder in the country is also here in the Kansas City metro area. So very cool, man. But hey, again, thanks for joining us. Just give the audience a quick snapshot, of your journey so far, right? I mean, from scaling a business to $87 million to now raising the capital. I mean, just tell us how all of that kind of came together, man. I can't wait to hear the story.
Yeah, I mean, I think for me, I think you hear a lot of stories like this. I'm in this world now where if you look at it, it's like very hard to believe where it started. I'm a college dropout. I have no degrees, don't have an MBA, didn't intern on Wall Street, like none of these things, right?
Right.
And I started in door-to-door sales and then ended up taking that sales skill into building the teams, duplicating, what I was doing. And then in a small business, you wear a lot of hats. So my father and I built Heartland Foods together, and it was a really difficult business, direct sales, food, thin margins, heavy supply chain, big utility bills. It taught me a lot about the business I never want to be in again, which is, very thin margins where you could be doing 10 million in sales, barely making any money. So,
yeah.
But the skill sets you learn wearing all those different hats in sales, marketing, ops, to make something like that work, really translate to the next thing. You just can't be married to your ideas when you find a better path.
Yeah, most definitely. I mean, wearing the multiple hats part, I think, is probably what gets most business owners and entrepreneurs stuck. Because you can't at some level. I mean, when you're bringing in $87 million of revenue, right? Like you've got to be able to delegate. I mean, that's all there is to it. And, I've been coached on, 3 levels of delegation, kind of there's the direct approach, like here's what I need done and here's how to do it. Then you kind of have the objective, which is like, hey, I just need this done, make sure it happens. And then leadership, where you're kind of asking, hey, what needs to be done and how should we do it? And how we can get to, more people that you're leading and not just directive and objectively delegating to, I think is, how you increase your capacity. So I can only imagine how you and your father had to do that, growing a revenue scale of $87 million and, tight margins, right? So like everything matters, I mean, and I heard Gary Vee the other day talking about this. It's like, one of these deals that I think comes up a lot in business and in real estate is this idea of, set it and forget it. And Gary Vee kind of like, he kicks that to the curb pretty hard, right? I mean, he's talking about, look, you got to be a true operator. And that's what you've done. And now you've been able to sit on another level, right? Managing partner of Pitch Equity Fund and the capital advisors for Safe Space Global, right? And so now you can sort of advise some of these up and coming businesses and people that are trying to get their businesses going to be able to maybe look at their position from an Eagles point of view, right? So talk to us about, what's going on now at Pitch Equity Fund and SafeSpace.
So Pitch Equity is a private equity fund, private equity hedged real estate fund. And the model is a continuous fund, which is a little different than what you normally see. Most people, if they're going to go acquire a piece of real estate, they're going to do an SPV. It's a special purpose vehicle. Or syndicated. We have all these fancy words for we're going to invest in one asset, raise capital one time, and close the deal. The way our fund is set up is we have one master private placement memorandum at the top, PPM. And it's not deal specific, which is cool because when you come in to work with us, you do that one PPM and you fund your account. And then we have separate deal disclosures for where you want to allocate your capital. So for the fund itself, we don't have to pay lawyers every time for new PPMs when we have a deal. Yeah. And it's a lot less paperwork and red tape for our investors. So I really like that model. We have a debt fund inside of there where we buy businesses. Right now, e-com's just been a sweet spot for us where we can buy supplement brands that are spitting off 30, 40% free cash flow. We pay our investors 1% a month, a 12% coupon there. And then we scale those businesses. And the vision on that side is 5-10 years from now, we'll roll that up and probably take it public in a SPAC. That's how we'll exit or we'll refinance out these investors. And so there's a lot of ways to structure things. And then we do one-off deals on the other side of the fund for the real estate. We've got projects as big. We've got a $4 billion project in Chattanooga that we're in the process of closing on right now. And then it's something as small as a 4-house development in Knoxville on the water on the Tennessee River. So we just don't asset discriminate. We look at, millions of deals. We were just looking at truck stops. We're talking about a resort golf course. I mean, a good deal is a good deal. And in the private side, that's just what we look for in Pitch Equity. It's really about buying right, having great relationships, because the majority of the money is baked in when you buy. So I think one of the things in the space is this forced appreciation thing on slide decks where operations has to develop their return. Obviously, you need good operations, you need to force appreciation, all this stuff. But if you can buy something at a massive discount, that's really the competitive advantage.
Yeah, absolutely. Taking a little bit of a approach like Charlie Munger and Warren Buffett on that front.
Yeah, and it's all relationships. That's why, to your point, I got to a point where it's like, okay, my first couple of funds I did with a couple partners that were starting out as well. And we did great. We went to 20 million AUM in just over a year. But we didn't have the competitive advantage that I now have with my partner, Scott Boroff, who's got 35 years in this business, did billions on Wall Street, 22 exits on the private side, taking 2 companies public, and his relationships with banks. Like, we can just get better deals. So I'd rather be his fund manager and manage the relationships, raise the capital, and let him go deal with the deal flow. Yeah, absolutely. Very cool. So one of the points that I want to make here is, you've got 155,000 followers, right? And I talk a lot about trying to build an audience. My primary platform being LinkedIn, Top Voice, 35,000 followers. It's not 155, right? Thousand. I think that's on Twitter, if that's correct. So make sure, is that right? No, most of my followers on Instagram.
Instagram. Okay, so definitely make sure to go find Justin on Instagram. We'll have to link your handles so everybody can give you a follow. But in regards to just building that audience, I think that's a big point in today's day and age. I mean, attention is the new currency, right? And I mean, my goodness, everybody has these little supercomputers in their pocket. I saw a stat the other day. Everybody who has an iPhone touches that on average about 2,167 times. 2,167 times. It's unbelievable to me, right? And so I heard Bedros Keuilian, one of my favorite guys on podcasting, and just a business builder. He's Armenian, immigrant to this country, was fleeing the Soviet Union and communism, got here, had lice as a young boy. They didn't have enough money, so they siphoned gas out of a car and poured gas on his hair to kill the lice. I mean, unreal story, right? But now he's got all these businesses, and he was talking about that. We all have TikTok brains now. We got TikTok brains, so it's like I want to hear from you, and we got questions rolling in, so we'll get to them already. We haven't got through any of the content. That's totally fine. This is the way that these are supposed to go. I do want to hear from you. How do you believe and what is your thought around building an audience and that being an important factor just in business in general as an entrepreneur today?
I think in today's world, no matter what you do, your personal brand is going to be the most important asset that you build in your life.
Yeah.
I learned, like, I had these aha moments because I started building it just because I knew I needed to, didn't really know what or why I was going to do with it. And I think that blind faith is really like, I really think it's just like when I talk to people in our marketing business, because we have a social media marketing business, this is the number one thing is people want to start the brand. They want to make the content after they already did the thing. And it's just backwards. You have to start showing up when you haven't built something. That's how you build it. So I started building my brand in 2019 with an organic food delivery service. And we were doing a podcast every week, educating people on food supply chain, breeding of animals, like how to source your food. It was a completely different thing than what I'm doing now. And then the pandemic blew that company up. Everybody was sitting at home. They wanted delivery. And that taught me another thing in business is that you can be excellent at business, but if you have to create the market, it's always going to be incredibly difficult. There was nothing better about me or my skill set from us scaling and exiting than struggling for 10 years to make that business work. It was the market condition.
Yeah.
Right?
Yeah.
You have to have the skills too, but make sure you're in something where people wake up and Google whatever it is that you have and sell.
Yeah.
So that happened. Sudden exit. Private equity wants to come in and buy you in a bubble. You got to take it. And I'm sitting there kind of panicking. Like I'd never done anything except build this food company.
Right.
And I had been investing in real estate on my own, and then putting money in as a limited partner into syndication. So I had a good idea that I wanted to be in that world. And I just decided to pivot my brand from organic food to now I'm a capital raiser. And I went out and just networked my way into a couple funds and said, I'm great at sales. I got a big brand. I think I can raise capital for you. And that's how I got started. I had no experience. I didn't know what was going to happen. And I just started DMing people with podcasts in the money world. I didn't care if it was life insurance or crypto. I just wanted to be in spaces in front of people that had money. And that's how I raised $10 million off Instagram. In my first 12 months raising capital, I never done it before. So without that personal brand that I was building for a totally different purpose, I never would have found success in the next vehicle, which I think is a huge lesson.
Absolutely is. Yeah, most definitely. Well, I'm going to take this off the screen for just a second. I'm going to put up a great question from Tim Gramling showing up today. So thank you, Tim, for your question. But Justin, he says, thanks for sharing your capital raising journey. He wants to hear what single metric or narrative element tends to move a prospect from interest to commitment and how that's been the most reliable function for you. So let's talk through that a little bit.
I think it's the same thing that makes you successful in any type of sale, especially in today's world. It's simply the frequency of authenticity.
Okay.
Thinking about, just showing up 100% you. Don't try to be something you're not. Like if you're new, everyone's going to know you're new. Just be new. But it's really also thinking about, okay, what are all the things that my investors should be concerned with? Because not everybody's even going to know the right questions to ask in due diligence, right? That's why they're looking for a place to place their capital. They already think, there's definitely a professional. It's better off to hold my money than me, right? So if you're in that position, I do it from an educational approach. Like, what are the things I would have wished that I had known to protect my capital on the way into giving it to someone else? So I use all my learning lessons of all the millions of dollars I've lost on the way of figuring out, who to partner with, what types of deals to get into, what to look out for. And it's a takeaway approach for me. It's no pressure. It's, hey, whether you place this capital with me or somebody else, these are the questions you should be asking.
Absolutely. So, I think that's great advice. You're getting a bunch of thumbs up and likes and all stuff from, I'm watching it on LinkedIn right now. So that's a fantastic response. I think that one thing that I would ask you as a follow-up to that and just kind of double click on for a second is, there is no conversation to have with an investor without having the audience and enough people to talk to, right? And so, I think that, again, if I just pull up this slide right here, because I think this is really good. Tim, thanks again for your question. I very much appreciate that. You have to be able to stand out online so you have that audience to be able to have the conversations with, right? And I think that, like, so many folks, maybe not so much, younger generation because they grew up online, but if you were sitting there and over the last 2 years, probably 15, 20 conversations with people who said, I just exited, I have no idea what to do or how to do anything now, because that was my identity, right? You went through that with Heartland Foods, right? And then you kind of rebranded, found out the new identity, and started pouring into building this audience online, right? But like, I mean, in regards to, maybe the biggest mistake that professionals and business owners maybe make when they're trying to build a brand, like what do you see happen?
For me, I think it's the microwave mentality of giving yourself limitations on the results. Like, oh, I'll try this for a month. And I have this perspective just because we have a social media marketing business. And
Okay.
the guys I'm partnered with, where I'm a VP of this company now, I hired them in 2021 to build my brand, right? And I knew that they had made 10 plus $10 million before they were 25 years old online. I'm like, I want to learn what you did. I didn't ask any questions. I didn't fight back on what they were telling me. I just simply ran the playbook.
Yeah.
And everybody wants to reinvent the wheel before they even have a wheel. It's just, I don't understand it. It's just, do what someone more successful than you in that thing has done. When you get to their level, then you innovate. It seems so simple, but people abandon the process. They want the results to come faster than they do. And most people quit. It's like that old meme you see, like chopping away and someone quits right before they're about to get to the gold.
Yes. 5 feet from
same
gold.
thing.
That's right. Exactly. 5 feet from gold. Do not stop 5 feet from gold. Okay. Well, let's get into some actionable things, right? You own a social media marketing company now. I'm a guy that has not gone to Instagram, has not gone to Twitter, has not really gone to YouTube. I've been on at least 150 plus podcasts, have a podcast, grown a following on LinkedIn, which I thought is maybe the best platform for commercial real estate. But like, maybe I'm thinking about that the wrong way. Why not be on the other platforms, right? But like, if you were to give some advice, how can someone in commercial real estate and business today start kind of building that presence online? Go back to the days that you did. I know you got the playbook and you started working it, but maybe before that, how do you think that somebody could start building this presence online?
It's harder today than ever, right? It's become a professional sport. Content creation, the highest paid creators in the world are making more than professional athletes. So,
Wow.
You have to understand what you're up against, and then you're up against the Hormozis of the world, and people with monster budgets. They put a ton of money behind their brand. So if you think you're just going to go create content and spam the platform and something's going to happen, it's very unlikely. So you're going to need to partner with social media companies that have strategies, right? Like if I can get a big influencer to bring me on their show like this, and I get to leverage their brand and we collaborate the content, and now it's going out to new audiences, that's how you're going to wrap in your target. But if all you're doing is just creating great content, let's say your content's great. Well, cool. It's like standing on the side of the road with a billboard and the cars are flying by, and it's like, oh, cool. I got 100 million views, but like 2 of those people are in the market for my thing.
Yeah.
So I think you need strategy. And a lot of what's made me successful is DM outreach. People forget it's social media. It's designed for you to talk to people, not for you to spam them with stuff. So yes, you need the content, you need all these things, but you have to go from creation to conversation.
Okay. Yeah, absolutely. Yeah, no, that's really good. I mean, when I first got started, man, I didn't have any success. I had no experience, right? So what did I do? Well, I love to read. So I started to write, excerpts of, hey, I know you're not going to read, Tim Grover's Relentless book, but hey, here's a full newsletter breaking down each single chapter. In that newsletter is a video for every single concept that I've posted, and a post on LinkedIn that you can go find, right? So people started to follow me as a personal, person online to say, hey man, like this guy's getting up at 4:35 a.m. He's got 3 kids, 6 and under. He's running ultra marathons. Maybe I should call him to see if he wants to sell me, sell some commercial real estate for me, right? Like he's probably going to work pretty damn hard. So lean into that, right? And I got some good advice early on, was like, hey, and my wife, she won't listen to this, so it doesn't matter. But my wife always says, I don't know how you put yourself, out there. And, she goes, I don't know LinkedIn Logan, right? That's what she tells her friends. What I want to show her friends is the results of selling close to $200 million of real estate off of LinkedIn. I don't care if you don't know LinkedIn Logan, because 35,000 people do now. And I've made 0 cold calls this year, Justin, 0 cold calls for real estate deals. I have 14 listings. I have 4 or 5 deals under contract, and people are asking like, what is that? Well, for 10 years, I've been showing up on a daily basis, just posting something of value and engaging with other people's content online. So anyways, I think those are some of my tips that I've got just from that standpoint. I love that you said it's a professional sport now, though. I mean, that is a whole different perspective shift, right? It's like, I didn't even think about that, and trying to understand the algorithms for each one of these platforms. I think it's really tough to be able to do that. So anyways, just some good thoughts there, I think, that I wanted to kind of bring up. One more question from Tim. It looks like he's very engaged today, so appreciate that, Tim. We'll get you up here on the screen again. So he's in a group that just launched a customizable fund that allows investors to allocate across the multifamily self-storage debt equity under one umbrella. So it sounds like very similar to a pitch equity fund, right? From your experience, what's been the most effective way of building early investor confidence before you have that multi-level, deal track record? Great question, right? Like that's a question, believe it or not. I just got a call from somebody who said, hey, I'm interested in starting a fund, and I'm going to do a blind pool fund. And they paid to get a PPM set up. That was probably 6 months ago. Three minutes ago before the call, I heard from him, and I was like, so how's that going? He's like, yeah, we're doing single asset syndications right now. So I think it's a question that a lot of people have kind of on their mind. So I'll let you respond to Tim here because he's been engaged. So Tim, thanks again for your questions, your comments, and for being here.
Yeah, wonderful question. And I asked myself the same question when I went into my first fund. And my answer to that was I need to leverage someone else's track record. And the way we did that, we went in a fund to fund relationship for our first couple of deals. It was a late stage private equity fund. So right out the gate, I'm raising for established brands. Think SpaceX, Flexport. These are some of the biggest private company unicorns in the world that'll go IPO in the next couple of years. So that's what I was selling with someone else's track record in my first fund. Until I developed that on my own. And to some degree, I'm still doing that. I've only been doing this for a couple of years. So that's why I partnered with Scott Boroff and Coach Michael Burt for this fund. Their track records are, they're 10, 20, 30 years ahead of me in terms of age and experience. So I like bringing in partners. That's my thing. And it also allows me to just do what I like to do within the fund, let them do what they're great at, and I get to leverage that track record.
Yeah, that's so important. I think that it goes back to that deal or money kind of question. And I keep going back to the comment that we made here is you're going to build confidence with people if you're showing up online on a regular basis, documenting what you're doing. If you're going and looking at properties, hey, get on the camera. I am here on site looking at this flex industrial building. I know from my experience, if we have more than 30-foot wide spans in this building, we're going to have reinforced steel, which is going to make the cost of that project 20 or 30% more. Make a video on that, right? Like you start building that confidence. There's so many lurkers out there, even if they're not engaging with you, they're watching what you're saying and what you're doing. And not to mention how many people have said to me, my gosh, you're all over the place. I'm like, no, I'm really in one place. I just show up in your feed every single day, right? Because of the content that I'm putting out. So I think that's really important, as well. We got another question here. It's not going to be up on the screen. They got it messaged over to me, but maybe what's the biggest difference between raising capital in today's environment versus when you got started? The question says 5 years ago, but let's just say the last 2 to 3 years, maybe some big changes in just raising capital from that time period, or are there any big changes?
I mean, I see a massive change in where I need to go for the capital right now. Just in terms of when I started, it was 2022, right? And it was the free money, low interest rate era. I mean,
sure.
People would get on calls with me. And I think this is one of your jobs as a capital raiser. It's not just to present the deal. It's to help them find the money. People don't think the way that you do. There were so many people that told me, oh, I'll get in the next deal when I have cash. Well, it was, what about your self-directed IRA? Do you have anything there? Oh, well, no, it's stuck here. I'm like, well, do you work there anymore? No. Oh, well, you can roll it over and allocate it to private placement. Did you know that? And then it's, you got to go find the money. So another one was, oh, I don't have any cash. Oh, well, what about, you have equity in your house? Put a HELOC on it. Did you know you could do that? Like those things were no brainers when interest rates were 2, 3, 4%.
Yeah.
Right. To borrow at 2, 3. I mean, the amount of capital I raised where people were borrowing at 2 and 3 and then, allocating it over here for the arbitrage. That was a great strategy for a while. Very difficult right now. And, a lot of people that deployed capital into real estate, I mean, it's just been a tough environment. So there's a lot of capital that's stuck. So it just means you have to work harder in the environment to find the capital. If you go up the chain into family office and institutional, it's a lot more finding the right buy boxes and due diligence and all that stuff, but that money's always there. So I think you have to really look up the chain right now. It's just a lot harder to get new retail capital. But if you've done, what Logan's done and built a massive brand and you have a base of people, you probably don't feel that impact as much.
Yeah, no, most definitely. Yeah, well, Tim, you're in Kansas City, so look me up. Let's get together, man. We'll talk more. Maybe I'll get you hooked up with Justin. You guys can talk shop. So appreciate it for you being here. All right. I want to get in a little bit of the real estate strategy. Okay. So, why, I'm just curious. Your experience in, I know you had been investing in some real estate, but you're also playing in the private equity space. And from my understanding, a lot of the private equity money that goes into businesses and tech and, I'm not going to throw oil and gas in there, but I have talked to quite a few oil and gas folks. It's like they look at the real estate returns and they're like, why would I do that? So why keep real estate in the mix when you're playing in some of these other spaces where you can get a pretty substantial lift in regards to some of the returns over maybe a real estate portfolio?
Yeah, I think there's reasons to have all these different things, but first and foremost is you have to understand what you're investing in. You bring up oil and gas. I made a mistake in my first oil and gas deal, didn't really understand what I was investing in and lost it all, So these things are speculative. It's kind of like data centers are hot right now. Yeah. They're a lot like oil deals, right? I think when people see these big returns, they don't really, adjust that for the fact that you lose your principal. Like, yeah, you get a ton of cash flow until the thing stops flowing. So sure. you got to aggregate those things. For me, the main reason why I went into real estate first is because it made sense to me. I understood it. And also, I needed a lot of depreciation to get rid of, taxes for the exit that we had in the business. So there's other reasons to invest in things other than just straight line returns. Yeah, most definitely. Well said. I mean, if you guys have any interest, I think some of the best talks and or resources around diversification is just Google Ray Dalio's The Holy Grail of investing, right? He's got a great video out there. Just go watch it. I mean, one of the most successful investors of our time. I wish he would run for president, and I'm not a Democrat. I'm a Republican, and I'd say that I would love to vote for a Ray Dalio, but unfortunately, he's too smart. He won't get into that business, and probably can have more impact outside of government with what he has been doing. But go check out Ray Dalio, all of his work in regards to diversification. I think that's a great place to start. Other person that I really like to follow in that vein is Howard Marks. So you can go read his memos. He puts out these incredible memos. If you're not a reader, just find the podcast where now he's reading those memos, right? So again, Justin said earlier, you have to go find the money. You have to work harder for it. Well, right now, you need to educate yourself in regards to what you should be doing and why. Okay, so moving on to, 2025. Commercial real estate, just real estate in general, the world in general, pretty volatile, right? Lots of different ups and downs and how to navigate, not just the real estate market, but the geographic location. You mentioned Tennessee twice. I'm obsessed with Tennessee. I'll be back in Tennessee in 2 weeks, checking out some more deals, but love Tennessee, mostly around Nashville, Knoxville, Chattanooga, right where you talked about. So can't talk enough about Tennessee. But real estate, you got asset classes, you got geographic locations, you got business plans, strategies, and all three of those mix for just a massive amount of different types of strategies to go into, right? And yet every single pitch deck is going to say 8% pref,
70-30 split, 18 to 22% IRR. So what the hell, Justin? Like where do you find and see the biggest risks and opportunities the next couple of years in real estate when everybody says the same thing on paper?
Yeah. I mean, that's a lesson I learned the hard way, right? When I was first doing my first private placement deals, I was looking at slide decks as if they were going to be facts.
Right. Yeah.
Yeah. And learned real quick that's not at all what panned out, which the one thing I did correctly is I didn't want to have too much capital with one single operator. I didn't want to have too much in A class, B class, or C class, or too much exposure to one part of the country. So, I spread a bunch of money across 1,600 units across 5 different states and different asset classes. And, I wasn't excited about A class at the time. I wanted to be in all those value add deals. And some of those ended up being terrible because they were on adjustable rate debt.
Yeah.
So I learned a lot of hard lessons just because I didn't know any better. So the way I'm looking at it now is it's always a great time to buy a piece of real estate if it's the right piece of real estate at the right price and the right, and you have to have a competitive advantage. That's the newest thing I look at is like, what's my competitive advantage? I won't buy something that's a good investment. Like I think like Bitcoin's the best investment for the last 10 years, no question, but I won't buy it if anybody else can buy it at that price. If I can mine it at a discount, now we're ahead of the game and I have a competitive advantage.
Yeah.
So I look at that the same way with real estate. Like the deal we just bought in Chattanooga, the CBRE appraisal, it's horizontal land development. It's 120 acres on the water. It's a big project. And the appraisal comes in at 131 million. We buy it at 26. And then the state of Tennessee is coming in with over $100 million of TIF financing. It's really difficult to screw that deal up.
Yeah. That basis is just unreal, right? And then you have public incentives to help out the process. So I love that. It reminds me of like, having a competitive moat around your investments, right? I think that's something that you got to think about. So, man, so many questions that I could just go off. But Irina, thanks for being here. You just stumbled on this session. Well, thanks for showing up. You're in Kansas City as well. Of course, I network around town. I'm all over the place all of the time. So shoot me a DM. Let's make sure to connect. Thanks for being here once again. My favorite session of the flow of this show is your quick takes, Justin. So we've talked about a lot today, just kind of giving people a little bit of a flavor. We'll point them in the right direction here to go follow you here pretty soon. But your favorite book and podcast doesn't have to be of all time, but like what's got your attention right now?
Maybe I should give a different take on this. I'm in a mode where I pounded books and podcasts for so long, trying to figure out my direction, which I think is the right thing when you need information. But once you see the path and you don't need more information, I think this is where most people get stuck. They just keep learning and learning and learning. You need to kind of slow down with that and get tunnel vision on execution. That's where I am right now.
Yeah.
And like, I know people argue with me like, no, you should always be continuously learning. It's just the way my brain works is I've really gotten away from this in the past couple of years because now I see the path. I just need to execute. I don't need noise. But I will say, one of my favorite books is You Need More Money. That's from Matt Monero. It's not a well-known book. That's why I like saying that one. It's really for people to really understand like why this is so important. Because I think a lot of us get stuck in the authenticity of like money's greed and all these lies. It's getting your mind right about why you need to go do this. Yeah.
Love that, man. Yeah. And I couldn't agree more, man. I was reading like, 25, 30 books a year and I just got to the point where I was like, well, how about just going and executing on this information, So if I do read a book, it's likely rereading one of the books that have a massive impact on my life. And people do ask me about that. And I just posted recently about that. It's Tim Grover's Relentless. It's Grant Cardone's 10X rule. And it's Gary Keller's The One Thing. So I've got some mindset in there, a lot of mindset in there. But then the one thing is all about execution. What's the one thing that I can do right now that makes everything else easier or unnecessary, right? Like that's a question that just rings true in my mind all the time. So great points there. I really appreciate you sharing that. Okay. So how about your biggest lesson from, selling Heartland Foods?
Man, biggest lesson from selling it? There's just so many. be prepared for your exit. I think we don't really think about that when we're building a small business, that it could even turn into something that you can exit. But investing in infrastructure and systems and processes that can scale, I think that's the biggest thing they're going to want to see. If you plan to sell your company, you're going to get a much bigger multiple on what you've invested in. So every year when you go, okay, how much money do I want to take out of my business? How much do I want to reinvest? Just remember, everything you reinvest in is a future multiple for you. And we didn't really operate it that way. We built a small business. We took a lot of cash every year. And if we had invested in systems and processes, like we invested in systems and processes that could take us to where we were, but not where private equity would want to take it. And,
Sure.
we lost a lot of multiple on that.
Yeah, that's great advice, man. First, well, I mean, we talked a lot about the capital raising tips, but maybe something we haven't mentioned yet. If you've got somebody trying to get to that first $1 million raise, what's your best tip for them?
Keep showing up and don't worry about the results.
Yeah.
It's just like it's the hardest thing to do mentally, is to realize that you are not going to know how to do anything that you haven't done yet. So you just show up and keep trying. That's it.
Yeah. I mean, I heard Jim Rohn talking about this the other day. He was I listened to this Motivate podcast in the morning. It's just this chop up of these talks, right, on music. I love it. It's great. But he was like, look, you got to start before you're finished, but you also got to finish before you start. Right. And so if that confuses you, go find that talk by Jim Rohn. But this is exactly what Justin is talking about right here. And you have to be able to show up and do it, and then do it, because Art Williams is on there saying, just do it and do it and do it and do it again. And that guy, built the biggest and largest insurance company of all time. I don't know if he's still around anymore, but man, that's a great talk right there too. So, I've got to plug in my little 2 cents whenever I hear something great like that. All right. I don't know if we can go out to 2030. Katie, I appreciate you putting 2030 on here, but how about next couple years market prediction, maybe next 2 years? What do you see going on?
It's very interesting and difficult to break it all down. My feeling is the last couple years have kind of created new segments of society where we can have a depression and a bull market all at the same time. And it probably sets up for just status quo, a lot of pain and a lot of success, depending on, the verticals you're in. That's why I got involved in an AI SaaS company. Like and we, went up as high as a $200 million market cap this year without any revenue. That's where the market wants right now. I would like to see interest rates come down. I'm praying that interest rates come down, and then we can really see real estate get going again.
Yeah.
I think it's going to be a lot of the same. And every time I've tried to call a big bear market and like we're finally there, I mean, by every metric of the imagination, we are at nosebleed stretched affordability in housing, the highest valuation of the M2 supply. Like every metric you look at is like the market should crash. But his history just says it's different every time. Every time you think it's going to happen, it just doesn't. So I just don't really worry about that. I just make sure that whatever we're buying in whatever market, we're buying it at a discount, so that if things do go south and we're fiscally responsible with our balance sheet, we'll still be able to capitalize on a big market turn down. But we're not just sitting on the sidelines either. Well said.
Yep. Agreed. Well, Katie, I gave Katie a shout out just a second ago. She said she was going the distance with the 2030. So,
well, I mean, by 2030, like you'll have stock market all-time highs. I think housing will be at an all-time high compared to today. Like time always works in the favor of the bull.
Yeah, absolutely. Yep. And time in the market is also really important, right? All right. So you've obviously taken some risk in your life, right? And you probably think about risk a little bit differently now than you did when you were kind of getting going. So maybe give us a tip and some advice around how to think about that risk. And I know you talked a lot about the basis of properties and businesses and things like that. I think that's extremely important, but maybe something outside of that, do you have any pointers for folks how to quantify and think about risk as they're getting started and or making moves right now?
Yeah, this is a big one, because this is why you got to be really careful about the information that comes into your ears and what you adopt as fact. When I was in risk mode and everything's working and the bull market's going. I was in the Grant Cardone mentality, like rent where you live, just keep expanding.
Yeah.
And then you go through your first big losses and it completely changes how you think about risk. For me, like if you don't have $1 million, you should be all in on risk until you do. Like you got nothing to lose. So risk until that works. I think when you get your first $1 million, like you buy a $500,000 house cash, you live in it, you pay off your cars, and then you go risk with the rest of it. I think buying your freedom in a home base, and when things go wrong, you don't have to worry about the basics, I think is the most important thing to me now in terms of risk versus growth. Whereas when things are going well, you just want to keep growing.
Yeah, well said, man. Yeah, take care of those basic necessities. I've never really quoted Dave Ramsey on this show, but I mean, his Financial Peace University changed my life in regards to just me not knowing anything about money as a 15-year-old and reading about how do I actually make sure I'm not living from paycheck to paycheck when I'm making $5.15 an hour. I shouldn't go blow all of that. I should put some money away, right? So I think that's really important just to kind of remind ourselves on a daily basis. Man, this has been great, Justin. Point people in the right direction. They want to follow you, learn more about what you've got going on, connect with you, talk more, because I'll tell you, the amount of people that are, you can't see it on StreamYard right now, but the amount of people that are live right now just on LinkedIn is one of the highest we've ever had. So obviously people are excited about today, so we'll probably have to have a follow-up conversation, but point people in the right direction so they can get connected with you.
Yeah, so it's at Justin Freistadt, just my name. I'm on all the platforms. I answer all my messages. I handle all my own DMs, all that stuff. So yeah, it's people are often like, "Am I actually talking to you?" It's like, "Yeah, you are. You're talking to somebody that works." So I think that's another thing is just we have more capacity than we think. We can handle more than we think, and some of the wealthiest people I meet, delegate less of those things than others. It's interesting.
Yeah, most definitely. So handle is up on the screen right now at Justin Freistadt. Go follow Justin. I know it's going to be worth your time. I really appreciate, Justin, you being here, man. Thank you for everything that you've shared with us today. If you're interested in Kansas City commercial real estate, just go over to our website, www.mwcreadvisors.com. We're coming to you live every single week on the Kansas City Commercial Real Estate Market Pulse Show. We'll have more awesome guests, just like Justin. Probably have Justin back first quarter of next year just to see what's going on for 2026. Thanks for tuning in. Thanks for all of your questions. If we missed them, Tim, reach out to me directly. I can get you connected with Justin and or answer your questions. Appreciate you guys being here. And Justin, thank you for your time.
My pleasure.